Welcome back to Rockstock Channel and our first ever Lithium Livestream. Before we even start, I just want to make sure that we're going to talk about a number of different stocks here, but and some of which are RK Equity clients and we may be invested in, and or some of our guests cover or are invested in as well. But Rodney and I are not financial advisors. Rockstock Channel and everything you hear is not investment advice, so please do your own research. A number of the analysts who are speaking on behalf of their firms, and they are financial advisors, but nothing you hear is financial advice.
Okay, welcome to Rockstock Channel's first ever live stream. We've done a Spaces on X before. We've never on YouTube done a live stream, so very excited. You get to see all the faces as well as just the voices in Spaces. We've assembled a great team of analysts in Australia and the US. We tried to get some in Canada. They couldn't meet today. Today is Indigenous Peoples Day in America. It's also Canada Thanksgiving, so the markets will be closed in the US, but they're already open in Australia. We have a lot of Australian analysts, both buy and sell side. On the buy side, we have Darko Kuzmanovic at Henderson Global Investors, a friend of mine for a long time when he was in New York at Deutsche Scudder, and he was educating me as I was pitching him on Ivanhoe Mines in Mongolia. So I think 25 years I've been talking to Darko, and a former guest on Rockstock. Almost everybody here has been a guest at least once, but not everyone. We've been meaning to have Anthony Kavanagh, another asset manager at Chester Asset Management, but you might have seen him a couple of times on the Money of Mine podcast talking about lithium, and he's going to share some of his ideas as well. Also on the buy side, we have Ernie Ortiz in New York, not a fund, but a royalty, Lithium Royalty Corp. You probably have seen him through our most recent interview in July called Rational Optimism. And I'm going to ask Ernie to share some of his macro views. But the crux of, or the impetus for putting this together now was the news last week of Rio acquiring Arcadium, and we're going to use that as a starting point to talk, very broadly. This could go longer than an hour. We'll see how we go. But let me introduce the rest of the guests. We have Trent Barnett in Perth, Uraz Hartleys, Hayden Bairstow, who we've not had on the podcast before, but ex-Macquarie, now Argonaut, also in Perth. Sam Catalano. I forget where you're based, Sam. You're on mute.
Brisbane, East Coast.
Brisbane. Okay, Brisbane. At Wilson's Advisory, he commented on the Rio deal on LinkedIn as well. David Deckelbaum, we've had frequently. TD Cowen, based in the New York area. And we swapped out Mike Turan of Black Swaddle. He couldn't make it at the last minute. This software enables us to have 8 people. But Tim Goldsmith is currently a non-executive director of Pantera Minerals, which has a Arkansas, kind of DLE story. But the reason I wanted him on the podcast is that he was the CEO of Rincon and responsible for selling that Rincon asset to Rio Tinto in 2021. And of course, my partner Rodney Hooper here. Before we get in, I just want to remind everybody, as we often do here, if you like this live stream, please like, subscribe to Rockstock Channel, make a comment. You can comment live here today. Actually, if you do comment, you could ask some questions to us. We are going to look at the chats, and I'll see if I can answer or ask your questions, to the viewers. With that, I guess I want to start, have a list of questions like this. So the RK Equity Scoreboard has has been running. In September, I speculated. I wrote the last lithium bull. It was called Better Bid Lithium. The scoreboard looked better bid on balance, and then the double entendre was that, oh shit, Rio Tinto, better bid for Arcadium, and it really looks like as soon as the market started turning, they acted, very quickly. But we've had a run further since then. This is a list of lithium stocks I'm following, ordered by percentage up from their 52-week low. So Q2 Metals, which has had very good drill results and they've been on Rockstock channel before. They're up 722%. Other companies, even Savannah, Arcadium, obviously, but Vulcan, a whole bunch of stocks up, more than 50 to 100% from their 52-week lows. But the lithium price hasn't been rising, too much. So I guess let's start. I guess I'm mindful of the location. It's like 10 o'clock, in Brisbane and in Sydney. Darko, as a fund manager, you've been following Rio Tinto for a long time. We were talking before this. Does anyone think, this is not a good deal for Rio? Everyone said it's a good deal for Rio. A lot of people think it wasn't such a good deal for Arcadium, even though it was a 90% premium. But Darko, why don't you give, that's going to be the launching port, is to discuss, from an Arcadium perspective, as well as a Rio perspective. I think universally all the press is like, this is the right time for Rio. They've been looking at it for a long time. They're in copper, they're in aluminum, they're saying like lithium is part of like the EV transition, but clearly with Rincon, back in the day, what I wanted to say is interesting. We have Tim Goldsmith here. In Rincon, I looked at the press release when they paid $825 million for, a non-producing asset, which they've now had to invest another $350 million in. But in 2021, they basically had said that lithium was going to grow 25 to 35% the rest of the decade, right? That was 2021. They're now saying, lithium is going to grow 10% through 2040, right? So a significant ratcheting down of the growth rate, but with a longer time frame. I'm thinking this is a bit of a sandbagging, right? They didn't want to kind of gloat too much here, but they did indicate that they're going to accelerate, the growth plans. They think they could add another 50,000 tons, and they also made Jakob Stausholm indicated, in some ways, if the price is lower for longer, it's better for them, right? I don't know if you read that, through the transcript or listened to that. So, Darko, why don't you start giving your initial view, and then we'll ask the others to participate.
Look, Rio, out of the big miners and miners in general, was the one that showed interest in lithium. So, not a surprise that they took action to take someone out. It's either build or buy. They had projects to build. It was probably easy to buy. You buy an integrated business, diversified assets, actually very complementary, kind of region where they operate. Rio's in all of those things. Perfect timing. And you're buying a team with a very long life asset base that you can expand multiple times over the next few decades. So perfect stuff for a company like Rio Tinto. Will it move the dial for Rio? Maybe, maybe it becomes 5% or maybe 10% at the best of times as a contributor. But you know what? That's as good as aluminium is. And they've been in aluminium for quite a long time. And what time to do it? Then right now. So from a Rio perspective, it's actually a great transaction. The question now is, can they execute? And, if there is a question mark you have on a big company like Rio, is it's a big company, okay? And they haven't really got a lot of experience building mid-scale projects, which most of these things are. So that'll be the $64 question, is how can they execute, and how will they execute, whether there will be sequential development or kind of a multiple developments at one time. I suspect it'll be market orientated. I think they're smart enough not to kill the market. So from that point of view, I think perfect time. I know the market some people liked it, some didn't. Some thought it was expensive, some thought maybe it's too cheap from an Arcadium point of view. But I think from an Arcadium point of view is, well, you're becalmed. You're a ship in, your sailing boat in the ocean and the wind's gone out of your sails. How long do you wait for the market to improve before you can go back on a growth path? And that could be 1 year, it could be 2 years, it could be 4 years. It's very hard to say. But if you're Rio Tinto, you're looking at decades, not 3 years. And that's really in the context that we need to look at. I guess if you're Arcadium, well, they were obviously a seller. So that's the other issue, is that, you might want to buy something like Rio, but what do you buy and what's available and what can you buy? Clearly Albemarle is probably not available, and to buy it would be a material acquisition, whereas this is available. And whilst it's a big number, it's a small number in the context of Rio. It doesn't change its financial metrics, it doesn't do anything. So it's just got so much more freedom, and it hasn't been penalised by the market as a result. So, but if you're an Arcadium shareholder, and I am, and have been for a long time, I'm happy that the transaction's taken place, because the stock, I think, has been stuck and will be stuck for a period of time. But I think if you look at it over the last few years, it is disappointing, because I think value leaked from the Allkem Livent deal to Allkem shareholders. They lost money on that, really, and then kind of surprised that they were actually sellers, given the story that they've had to sell. So I guess they're sellers, and from an Arcadian perspective, you've got to say, you've got to be happy, because management is going to sell.
Anthony, were you a shareholder in Arcadium, or did you have a view on this?
We were, and I completely agree with Darko on all those comments. I'm a bit limited in what I can say at the moment, given there's a lot of background noise. So you might need to keep running with someone else for a couple of minutes before you throw to me, I think, mate.
Okay. Anyone want to chime in here? David, you're the one analyst, I think, on the sell. Well, maybe I'm wrong. I don't know which of the other analysts may have covered Arcadium, but you had Arcadium as your top pick. Your target price was $6 recently, but it was $10 at the beginning of this year when, after the merger, obviously a lot of analysts, downgraded the lithium prices, and that led to, short-term downgrade to target prices. But I was looking at the PP&E on the merged company balance sheet of $9 billion, right? And they sold the company for $6.7 billion. Kate McCutcheon, unfortunately, of Citi, I invited here, wanted her, but wrote this note in July: buy versus build. Had to fix a $7.7 billion replacement value for Arcadium. And that was just like on the theoretical, pure assets, like not really affixing any additional value to the know-how or the customers, or the fact that you really can't replicate. There is no replacement for this kind of collection of assets. So, what's your thought, David? I thought this was extremely hurried. There was no alternative bidders sought. I thought we were going to have 5 or 6 months of back and forth, like BHP Anglo or Glencore Tech, or some of the, just a year ago, everyone was fighting for assets in WA. And here we had, a hat tip to Haplo, on X. He put out a post, showing a, Texas Hold'em, poker game. The negotiations were like immediately full. So why did Paul capitulate, in 3 days?
That I guess we'll find out over time in the background proxy. I think ultimately, leaving things like replacement value out of the conversation. Arcadium was very undercapitalized for what they wanted to do. And I think that was something that was weighing on every executive at Arcadium, irrespective of price, is they had between, and I think it gets back to, I think Darko mentioned like the value leakage with Allkem and Livent, which only closed at the beginning of this year. And obviously the stock's been very disappointing since then. And you find yourself in a place where, perhaps theoretically you bit off more than you could chew in an environment like this right now. And you have, I don't know, three different projects in Argentina, two different projects in Canada, one in Australia that you're not capitalizing, but you certainly have to manage. I think it's just a case of being undercapitalized. You look at your scoreboard of 6 different projects and you're like, well, I can't really maximize any of the value here. So I can either, kind of just wait along here with the tide and maybe be up 10, 15% a year. And I also think internally, Arcadium's team has never had a very robust view of lithium macro. And I think that plays into it well. We thought that Rio was compensating them for, roughly $15,000 a ton LCE lithium. And if they don't have to take any of the execution and capex risk, on top of the fact that they also wanted to, I think have to consolidate in the Nemaska project from Investment Quebec, which would have been a pretty large ticket item. So I think this was just a case of ultimately just weighing your options and saying we can de-risk investors right now in an otherwise, macro situation that's extremely uncertain right now. While we also know that if we're going to properly have to pursue projects like this, we're going to have to go back to the equity markets perhaps at some point. And I think that reality probably weighed their hands more than anything else.
Okay. I mean, he went out of his way to say at the investor day that he wouldn't need to raise equity, but I guess that's what what you say.
But keep in mind, he was going to raise $700 million of debt before the end of this year, right? So, and I think he said that it was going to be something at 9%. So there's expensive options out there.
I might just chime in there, Howard. I was sitting there with David in New York for that investor day. I mean, the takeaway that I took was there's a lot of moving parts. There's no way that they have enough stable financial capability to pull it off. They're clearly going to have to slow things down even more than they already had. Either that or substantially shift how they were funding all of these projects. So, I walked away just saying this thing is going to be in financial trouble unless someone comes and takes them over with a better balance sheet. And that's almost how they dressed it up at that investor day as far as I was concerned. I just walked away thinking this is either Rio's or there'll be one almighty capital raising at some point next year to keep this growth pathway as aggressive as they were keeping it. And from a lithium point of view, it's a great outcome for everyone because Rio, I think as Darko said, they're a value over volume player. They've been singing that tune in iron ore for 15 years. And there's no way they will deliver the sort of growth rates that Arcadium had outlined in sort of wave 1 into wave 2. It'll be much slower than that, the way Rio operates. They'll do it as the market needs it, not as they can deliver it, even though their financial capability is much stronger. So, I think it's a good deal for Arcadium, and it's an even better deal for the lithium industry.
So Hayden, what do you make of Jakob saying that they're going to accelerate by 50,000 tons LCE? I forget what time frame that was.
In the shorter term,
is that
perhaps
just market signal?
Well, he's also got his own projects, right, that have been sitting in the background, not doing much. So does it give him a chance to push harder on Rincon, given they haven't really done anything at all, potentially? I think it was very interesting that the comments around the lower the lithium price is, the better it is for us, is because they haven't finished acquiring all the assets they want to actually deliver the outcomes they're planning. And that's, interestingly enough, it's both in hard rock and brine. So arguments about which is which. I mean, they are going to be pretty heavily involved in both. And I mean, you consider Jadar a hard rock mine in Serbia if they could ever get that thing moving. But they don't seem to be worried either way, which sort of part of the industry they're in, whether it's brine or hard rock. So, yeah, there might be some shorter term acceleration because obviously, like Arcadium was putting projects on hold, like the Phoenix expansion, which is an absolute no-brainer, in place of doing Sal de Vida, and they were sort of pushed into that based on the construction contracts that have been signed, and they couldn't slow Sal de Vida down, is basically what Paul said.
Okay. I want Ernie to chime in here on a comment. David, you mentioned that this deal was underwritten $15,000, and Arcadium didn't really have a super high long term I guess view of the market. But Paul was always saying that look, it's highly volatile. Prices could be $30,000-$40,000 in the not too distant future. So like for all of you guys who are saying, if he had to have slowed down Arcadium's growth for another year or so. That could have severely impacted supply in the market, and therefore accelerated how high or how soon and how high the price could go. One would think you're selling at the very bottom of the market. I guess there was, look, Rio made an approach. Everyone knew they were out there. Everyone was speculating, why did they buy, Livent before they merged with Allchem? And everyone thought when they merged, okay, now it's sizable enough. And I get it. It's a much bigger company with assets all over the world. Maybe Paul from Philadelphia managing, and traveling all over the world to these locations. It was a very large board, large mix of assets. But still, and yes, it was a good premium, but no alternative bidders. I mean, we had speculated in our last podcast that POSCO is active, in both Argentina and and Quebec. The Japanese, Toyota Tsusho is in the capital structure. Mitsubishi and Mitsui have been, there. Tesla, loves Argentina. Probably a long shot, but I know there weren't very many obvious bidders. Rio was the one, but why not? Wait. I guess that's a question to see if there's alternative bidders. But Ernie, what do you think about if you could give us some market color? Underwriting. Is $15,000 today? The something that if you're investing in lithium, you're if you got $15 today, you'd be happy, or you should be happy with a medium-term time horizon.
Sure, and I think we've seen some other estimates that perhaps the implied price is closer to $20,000 per ton. But either way, I think it's all, call it mid-teens or high teens. It's still much higher than where it is today. And if you look at the long-term consensus, it's still circa $20,000 per ton. So I think there is the view that we are going to likely see higher prices at some point in the future. Of course, the key question mark is when. And when you put that against time value of money for Arcadium shareholders, I agree with what the panel has mentioned, that it does give you a lot of optionality to take that money now. But that said, I do think the market is improving, both from supply and demand. I can get into why we think that, or we can leave that for later on in the panel. But no matter how you look at it, I think prices, whether it's the next 2 years, 5 years, or 10 years, you should be looking at likely higher prices, given what's still expected to be a pretty robust demand environment.
Can I just add something there, Howard?
Yeah.
Yeah, so I think what Ernie said is right. And we talked a lot already today about risk reward and how that relates to the price paid. In my conversations with investors and market participants recently, I don't think there's much pushback from many or anywhere that I've certainly encountered to suggest that lithium prices, whether it's chemicals or spodumene, need to be higher at some point. And we talk about incentive level pricing and how that relates to long-term prices. But we step back and think about how analysts, and I'll put myself in this category as well, actually analyze commodity markets. So yes, there's a fundamental sort of module that you use to incentive level pricing to get long-term prices. But realistically, most analysts' short-term prices are anchored to wherever the spot price is. So you go and look at the next few years of where most analyst forecasts are, and they're not a huge amount north of where we're looking at now, and somewhere between there and fundamental incentive level pricing, there's a jump up. But as Ernie's alluded to, knowing when that is extremely difficult to say. And I think that when we're thinking about potential counter bidders, having the confidence and the desire to go and pay money when someone's already gone and thrown a significant price on the table is quite a commitment to make. In a relatively uncertain environment, and certainly that bid from Rio gives that certainty, as a lot of us have been saying.
Yeah, I thought Albemarle could have been a great bidder. I don't think they would have had antitrust concerns if their balance sheet wasn't so stretched, right? I think we could have had a global champion, out of America. I thought that would have been a good deal. And there's also groups like Glencore and others, but Rio is really smart. They've been looking at lithium for 17, 18 years with Yadar, and they had the balance sheet and they were ready. So from an M&A point of view, I think they just did an excellent job. I want to bring Tim Goldsmith in for a second. But Darko, I was thinking that everyone talks about Rio was stupid on Alcan, and then Riversdale, but actually they played, Turquoise Hill, and the former Ivanhoe Mines M&A process really well. I thought, right? They didn't overpay for that. And I remember, Robert, they got the best of Robert even, initially they had a 49% stake and then they managed to kind of take it over. I don't remember all the details of that, but more relevantly, the question is like, can they operate, right? So the Oyu Tolgoi, the Mongolia project, I think now is, they're almost done with their investment cycle there, but that has taken a much longer time than originally anticipated. So Rio doesn't always overpay. They haven't, but they don't always execute, perfectly well. And this is a specialty chemicals business still, although they paid, an iron ore multiple or base metal multiple. But Tim, you had the benefit of getting the best of Rio Tinto, I think, in 2021. So what was that dynamic like with Rincon, and how do you assess what happened here?
Howard, before I talk on that, I was just following up one of the points which Sam came out with. I think the piece which is very misunderstood on lithium is the geopolitics of it all and the absolute stranglehold China has had in this industry for 15, 20 years. And you mentioned earlier that earlier in my career I actually worked an awful lot with China as they looked to invest out of country. And frankly, they are the best strategic long-term thinkers I've ever met. But I also do think they get very lost in the short term at times. And I think what's played out in lithium, particularly since the IRA was released, I think my perception of what I understand of China is the Chinese would have seen the IRA as a plan to stop China. And they aren't going to take that happily. So they would have, I think that their best response to that was to flood the market with cheap lithium and keep the lithium prices very, very low. But where I think they suffer is this short-term thinking that having been very successful at that for a little piece of time, they now need to be very careful that low lithium prices will stop any Western development. And it has done this last 6 to 9 months. So I think that there's... we should have seen prices go up before now because we need to incentivize the next explorers. We can still see loads of projects which came out from the last few years when there was very high lithium prices and explorers could actively get money and developers could. Now that's all dead, not going anywhere. So when all of a sudden lithium prices do start rebounding, there'll be nothing to stop them going back to 80,000 or beyond. Who knows? Who knows what the number will be? But I do think we're stuck in this boom-bust cycle. And I think Rio thinks through this stuff much better than most. I mean, I think that what they did on Rincon was very sensible for them. We were very pleased as the sellers as well. And I think what they're doing here is very logical as well, Howard. And the logical very next step to become a senior player at what I think they would see as a low price in the market.
Okay, I want to bring Trent in. You wrote a note after the acquisition, basically saying that this should underpin higher valuations for lithium stock. If you could just articulate, I don't know if you covered Arcadium, but if you could just talk about your note and what, because right now I see positives in the lithium market and lithium equities, which are reflected in the scoreboard, is M&A. Is this China stimulus that has come into the market, although it's not exactly clear how directly that helps lithium. But on the negative side, you still have U.S. election uncertainty. I was hoping Tesla's robotaxi unveil was going to have some benefit, but it turned into like a damn squib. lithium prices are not rallying, too aggressively. Maybe there's a little bit of an uptick. So like, are we going to see a sustained rally, in lithium equities, or is this going to, peter out? I think Trent and others and Sam came on our podcast, in April, thinking we had bottomed, and it was a dead cat bounce, before we went lower. So, I guess what are your thoughts, your current thoughts, Trent?
I think, there's a premium now added in for M&A across the sector. So, and the equity market is a very broad church of all of experts and non-experts. And so what we might consider a non-Rio asset, someone else will consider maybe Rio will participate in that. So you start having a bit of a put across the sector. And it's not just the Rio bid, there's also Pilbara buying Latin a couple of weeks ago. So that protects some of the downside in the equities. And then I think, like Tim said, more importantly, is the build out now potentially of a Western world supply chain. So if I think of an EV producer, where you're going to get your chemicals if you can't get them from China, you're going to be relying on capitalism, relying on low commodity prices, and that upstream just was never going to get built out. Now that you've got a capitalised, big miner that has bought an asset that's pretty broad, has brine, has hard rock, has conversion capacity of hard rock, has purification of brines into battery grade things. Now you have a potential supply chain to build your car manufacturing facility, knowing that you've got a big brother who's going to be able to feed you what you need over a medium to long term horizon. So I think both those things. One is it underwrites the certainty more of a US EV cycle, which everyone's started to become disappointed in. And the other one is just adding M&A premiums into everything. And also every time now there is a bid for a lithium company, the broad church of equity commentators is now always going to say, is Rio a potential buyer for that?
Okay. Anthony, are you in a better place?
Currently walking down a dark alley, but it's a bit quieter, mate, so you should be able to get me here.
Okay. Any thoughts you want to share? Just I do. Trent brought up Pilbara and Latin, and here we have Rio Arcadium. They did not buy in Western Australia, right? Like Pilbara wasn't bid for, or like this time last year, all the activity was Azure, Liontown, you had MinRes and Hancock, as well as foreign players like Albemarle, and now Western Australia is not in the picture at the moment for M&A. And then there's some people say, the whole brine versus hard rock debate, Brazil, Quebec, versus WA, what are your thoughts on that? And do you think Rio's done, or might they make more acquisitions?
I don't think Rio's done, but I think there's an obvious reason why we haven't seen any M&A or much M&A in WA, and I think it's because people are a bit scared of going up against Gina's firepower, to be honest. Without speaking too out of school, I think that how she blocked the Liontown deals shows that there's deep pockets there, and people just don't want to come up against that kind of firepower and see their deals blocked. To the point around, Rio and Pilbara, I think the one thing that connects them is just the strong balance sheet, right? So, the land resources and the Arcadiums of the world that don't have the firepower themselves and are sitting there with a stretched balance sheet are vulnerable. So, to think who's going to be next, I think you're just going to see who's got the weakest balance sheets for the biggest growth projects, but who are the people that are going to do the deals, right? And you've got to look at anyone who's got the firepower to do it. And I think that list of candidates is getting shorter and shorter. So Rio will bed down its acquisition. I wouldn't expect Rio to do another deal anytime soon, but who might know. But I think you're still going to come back to the obvious candidates. And I would suspect there's going to be a few more asset deals from here rather than necessarily kind of large-scale Arcadium type deals in the short term. I still think that there's some Japanese and Korean money on the sidelines that's still looking to do deals. I mean, POSCO's name keeps coming up, and I'd suspect Mitsubishi and some of the other Japanese players have capital that's looking to be allocated still. I couldn't tell you which specific assets are the next to deal, but I suspect that there's some deals in the pipeline over the next 6 or 12 months from those parties. But yeah, the point that you made around jurisdiction, I mean, jurisdiction is a massive factor in all of these deals, you know. I mean, Rio's obviously chosen Argentina versus Chile or WA, and Pilbara's obviously chosen Brazil over Quebec. So it's become a massive factor in these deals. I can't remember what the other question was, to be honest, mate. There was a few there. But hopefully there's some insight.
That was the one big insight I got from that, is that maybe the speed with which Paul Graves wanted to get this deal done is to thwart, Gina, right? He didn't want that outcome.
Yeah, I would have, and I don't have any direct insights into Gina's strategy from here, but I would suspect that she'd probably prefer to play in WA than going to somewhere like Argentina herself. So I wouldn't necessarily thought that she was a counter bidder to Arcadium, but I've been surprised in the past.
She is in Vulcan, which is a topic I want to kind of discuss here on the DLE side, and what's holding up, that valuation. That valuation has been well supported with equity raise by her and others not that long ago. But you mentioned Rio is Argentina, but it's also Quebec, right? You said Pilbara went to Brazil and not Quebec. I'm looking at this as Quebec and Brazil, but not, Australia. And I think there's, Rio is very active in Quebec in titanium and iron ore, and most importantly, aluminum, right? So there's a lot of infrastructure there and knowledge and connectivity. I think they're the ones to kind of realize. Quebec has had such a negative headwind for years that I'm very interested to see how Rio articulates their plan and vision there. Any of you have any thoughts on that? I mean, you have Sayona and Piedmont now are producing, but you need downstream to be built down there, and Rio is well placed, starting with Wabuchi. But if they replicate 5 aluminum smelters, this could finally realize the North American hard rock. This is like Western Australia to China, all within Quebec potentially. If Rio plays it that way.
Howard, can I just make a observation about a lot of this discussion today is around why weren't there any other bidders? Who could be next? Is there going to be further M&A thematic in the sector? And I think if we put up the fact that a lot of people have talked about the fact that Arcadium was fairly unique, and it was a clear target that makes sense for a Rio Tinto. If indeed that's the case, and indeed we don't see forthcoming other bidders with deep pockets in the near term, then surely I would think that the next best option, which probably some smart M&A bankers are already pitching on, is if we look how Arcadium was built, it was built through mergers. What I would think that smaller independents should be talking to each other and trying to pool their resources, and perhaps that means prioritizing one project over another. So you've got to get over management egos and so forth. But I would think that if there's no one out there bidding in terms of acquisitions, then there should start to be a thematic of smaller developers in the space starting to pool together and perhaps trying to build the next Arcadium.
I agree with that, and I think Arcadium Paul Graves said you need to be a multi-asset company, and I think Pilbara kind of took that on board by going into Latin. So, and you're right, Galaxy and Orocobre, and then with Livent. So, I think Anthony has some views on one merger in particular that could happen. If you want to talk about that, Anthony, and maybe. Ernie, I'm mindful of Ernie's time. He probably can't talk so specifically about individual companies, but I do want to get more of Ernie's thoughts before he has to come off. But Anthony, like on the scoreboard, we're losing a very significant pure play, a liquid. It's frustrating. There's not that many ways to play lithium. I mean, but you do have Sigma as a producer. You do have Pilbara as a producer. You now have Liontown. You have Sayona, Piedmont. But I remember when Lithium Americas merged with Western Lithium, right? I don't know, 7 or 8 years ago, you had two. People said, congratulations, now you have two unfunded projects, right? And then they separated. So I think it's not necessarily so great for like an unfunded company to merge with another unfunded company, but you do have companies now that have just started production. I mean, Sigma could be a consolidator, although Anna said she was more interested in moving downstream to sulfate than consolidating. So where could we see, intra, junior, or recent producer, kind of M&A happen? Anthony, why don't you start? You froze there, Anthony. All right. Hopefully, Anthony will come back. Anyone else want to answer that question as a start?
Well, actually, I'd probably add...
Howard, one thing which is just saying there, which I just want to sort of chime in on. If we lose Arcadium as a listed vehicle, which you have to suspect is likely to happen here, you then have probably the global leaders in DLE being what will be the Rio Tinto team and Exxon Mobil team, neither of whom are going to be saying an awful lot publicly about what they're doing. So I think that this may have a ramification in... I know a lot of the world doesn't want to believe in DLE, whereas I've been sort of working with it for 6-7 years now, and I totally and utterly believe it. But it's going to be hard for the proof to the rest of the world to be shown, other than how Exxon and Rio will selectively disclose things which will be immaterial in their balance sheet for many years to come. And I do think DLE is going to be a huge game changer for the cost curve of lithium in the next 10-15 years, which is obviously going to be very important for pricing in the longer term.
Do you agree with that, Ernie?
I think it's going to be very asset and technology dependent. I think one of the key potential new entrants to the DLE space is Eramet with their Centenarios project in Argentina. And they've commented that they want to start production in November of this year. And if you look at their public guidance for cost, it's circa $5,000 per ton LCE, which is actually very similar to some of the other kind of legacy conventional pond type systems. So I think it's yet to be seen whether they will have a dramatic OPEX advantage versus some of the conventional systems, especially if the probably major new addition in the West is having very similar type cost to conventional ponds. So that's yet to be seen. And then even on the CapEx side, I think it was also very similar CapEx intensity to conventional ponds. So sure, I think there will be some benefits. Of course, there's just purification and concentration of the brine. But at the same time, you do have a lot of energy requirements for DLE. So I think it'll depend on the asset and the technology where it can potentially have big impacts. But I think so far what we've seen is that it hasn't had as big an impact on cost and CapEx intensity than perhaps the models have shown it.
Okay, this point on DLE is one I do want to dig into because Iliad, which Arcadium invested in, and so did SLB, what used to be called Schlumberger, and this was highlighted by Jakob Stalsholm, and someone was commenting that I don't know if that's right. Someone on Twitter mentioned that Arcadium locked up Iliad, so Rincon couldn't use it under Rio, so they bought that. I don't know if that's true. I think that Iliad would have licensed it to Rincon as well. I don't think they had an exclusive Arcadium. But the bottom line is this Iliad technology. There's 80 DLE technologies out there, as far as I understand. Rodney and I have had some experience with Iliad and energy source minerals in particular. We represented Compass Minerals in the Great Salt Lake. And they had a very robust, 2 to 4 year, selection process for a technology service provider. And they had other, prominent, American, Chinese, Russian technology providers that they did not select, after we had introduced Iliad. So we had like an upfront, view on this technology being among the winners here, and and Paul Graves had talked up that technology, and then energy source minerals. David, you and I spoke. I thought, like, if you're looking at North America and you look at hard rock in Quebec and Ontario or in Carolina, and if you look at sediment, if you look at the Salton Sea, if you look at Arkansas Smackover. If you were look to develop in North America's assets, where would you go, and pick and fund, right? And I would presumably think that, the lowest technical risk, the most proven would kind of be hard rock. But David, you had a slightly different view about, the Salton Sea. Not to put you on the spot there.
I think it's about, I think the comment was more squarely around incentive, right? And you look at the, the accidental deal with Berkshire Hathaway and dealing with a fluid brine coming out of power plants there, right? So I think it's a matter of taking advantage of resource and infrastructure that's in place in an otherwise extremely large resource. So the size of the prize is very large. So, as a playground for some of the separation majors, that are endeavoring to get involved in DLE, there's a huge risk reward opportunity there for something that, again, isn't going to show up, unfortunately, in their results for quite some time. It's the same with Exxon, trying to get to 100,000 tons a year by the end of the decade in the Smackover, right? So these are effectively free options for them.
And David, you cover oil companies as well, and there is a question: will Exxon buy Albemarle? Right, that's if they're really serious about getting into the business. But I saw Patrick Howarth speak at the Fast Markets conference, and he kind of said definitively, in lithium, we will not do hard rock. Right, so that might rule out the Albemarle idea. Rodney, it's been 50 minutes and you haven't said a thing, or I haven't invited you to say anything, so forgive me for that. Why don't you have some questions here? Why don't you direct them first at Ernie, because he needs to leave in 9 minutes, and then we'll carry on and dig deeper into some of these other questions.
Sure. It's just a normal podcast for us, Howard. There's no change. So, Ernie, let me just, I got to come up with, pull up the questions here. But so, we've got quite a lot going on, Ernie, and you look at the differential in conversion, CapEx for conversion costs globally. And we have an election coming up in the US and some questions around that. If the IRA falls over, if Trump decides to pull it or materially change it, where does that leave ex-China chemical conversion in North America?
Sure. So I guess big hypothetical there. But one thing on the IRA, we are seeing a lot of the benefits go towards a lot of Republican-leaning states. So I believe Georgia has been the biggest beneficiary of a lot of the investment, and then you also have Panasonic building their plant in Kansas. You have the Corpus Christi facility from Texas, and with Tesla. So it's to be determined whether the IRA does get impacted or severely curtailed, even in a Republican administration, given the benefits are so tied to Republican-leaning states. And at the same time, you have seen some of the rhetoric become more focused on whether a foreign automaker or battery maker, the difference would be whether they actually promote domestic capacity versus importing different vehicles or batteries. So that could be an important distinction where so long as it's made in America, then there's potentially easier paths to production versus just the outright banning of any technology or any form of joint venture. So I think it's still to be seen. I think you are seeing also I think parts of the Republican administration opening up to EV, especially with Elon Musk being kind of an advisor to part of the Republican administration. So I think it's you're seeing things improve where before there was maybe very negative bias towards EVs on the Republican side, whereas now it's more neutral, and it's starting, and the sentiment has shifted materially. And even in the absence of kind of the political realm, you are seeing OEMs continue to invest, and you are seeing EVs starting to sell in a much better way than they were at the beginning of the year. I mean, EV sales were up 27% in August in the US. And it's the first month we've seen, I think, all year that's up more than 20%. That's for pure battery electric. So you are seeing continued investment from the likes of different automakers. And what comes to mind, given they had their investor day last week, is GM. They're guiding to $30 per kilowatt hour lower cost next year, and that will be much better profitability for EVs in 2025. So even putting politics aside, you are seeing the cost performance and the EVs that are actually coming out from the Western OEMs improve dramatically going into 2025. That even in the absence of subsidies or removal of subsidies, they'll be much more competitive going forward in 25 and 26.
Okay, and maybe Hayden, you can take this first one on. I see various commentary and basically a back solve to what's implied as a spodumene price across various valuations. It looks to be somewhere between 1,000 and 1,500. I guess the question now is, is that's ahead of where we are in the spot market, and I know Fastmarkets are going to launch a futures market soon. How do you feel that kind of ties in with what's implied in the forward curves in the future and relative to your long-term pricing?
Yeah, I think it's. I mean, equities are always going to trade either side of the spot price when they're at, either depressed or record levels. I mean, none of these equities priced in 80,000 hydroxide forever either. So, you're always going to get that both ways. But I think it's interesting that you're seeing Fastmarkets and these sort of organisations talk about this stuff, where we're seeing companies like Liontown publicly report spot sales over 800, yet some of the indexes are still printing below 800. So that's an interesting dynamic that's emerged in the market in a very short order. I'm not really sure why that is, but we're certainly hearing of other spot sales in the market that have all got eights in front of them. So the price has already recovered a little bit. The view obviously is that if you run $800 or $750 a tonne through every model that you have, most projects don't make any money. So you're not going to have these things continue to produce at these levels. Ergo, you're well into the cost curve. You will get a supply response, and the price will recover, which is why the equities are partially factoring that in already. The question then becomes: is for how long did it occur for? What sort of damage did it do to balance sheets in the industry, and what position will the existing producers be in to bring production back online, and when will they be willing to do it? That always takes longer than you anticipate. So, the market is always going to price in better commodity pricing than where spot is at a depressed level. Like the same goes for the iron ore market when it was $40, $45 a tonne. I mean, none of the equities are pricing anything like that forever. So, I think you'll see continued recovery in pricing. The question will be: is that when is the capital going to come back into the industry to really aggressively build out new supply? Particularly from the existing producers. I think less so from new developers. They all seem to be effectively on the bench waiting for a much tighter lithium market and potentially, either a demand shock to the upside on ESS or something, or we're going to see a slower build out of projects over time, unless we see some significant supply side issues across the board from somewhere, whether that's out of Africa or logistical issues out of Argentina. remains to be seen. But in the absence of that, I think it'll be a reasonable recovery. But there'll be a point in probably two years' time, I think, where there will be a bit of a demand shock to the upside, and it'll take a while for supply to catch up again.
Ernie, before I know you need to leave, but I think among the team here, you may have the most direct experience in Brazil. So I want to go around the horn here, around the world. Brine, hard rock, DLE, sediment. So just in Brazil, obviously Pilbara came in for Latin. Sigma, you're heavily invested in, from a royalty point of view, but you also have Lithium Ionic, and Atlas, just as a jurisdiction, as a spodumene, there's this debate, how's it, what are your thoughts on Brazil and maybe any other final thoughts before you have to head off?
Sure. So we're big believers in Brazil. So we have a royalty with Sigma Lithium, which we invested in 2018. We also have a royalty with Atlas Lithium on their Das Neves project in Brazil. And then also a private company called M4E. They have 90,000 hectares across Minas Gerais in the northeast of Brazil. I think they're the largest lithium landowner in the country, but that is a private company. And what's attracted us to Brazil are many things, but key things would be they all seem to be generally high grade. Cost of production are quite low. They seem to be around $500 to $550 per ton CIF, and that's across the many different producers that you look at. Right now, there's only really three, but AMG publicly discloses their cost, and that they're also around that 550 or below ton CIF, very similar to Sigma. So they are a very low-cost producer in the hard rock space. Also, the speed to market is, I would say, is probably unrivaled in the Western world. You can get projects permitted within 12 to 18 months. Drilling cost are $200 per meter. You can drill year round. The lucky thing for a lot of these hard rock ore bodies in Brazil also is that they're far away from any sort of native title, or they're far away from the Amazon. So it's very easy to get things done. And you add on top of it hydropower. It's 95% plus hydropower, even in that SOE where Sigma and Atlas are. There's a big solar facility already put in place, and it's expanding. So there's a lot to like. Obviously, it's a new jurisdiction, only 3 players now, but we wouldn't be surprised in the next 3 years that doubles to 6, and then probably by the end of the decade, you're talking about 10 to 15 different producers. And we almost think of it as what WA was 5 to 7 years ago, when you were just discovering these new ore bodies, and now it's starting to be discovered, developed, and produced in short order.
Thanks for that. We interviewed Sigma recently. We also did, Lithium Ionic, and I'm just looking at the scoreboard and the rally that you've had in some stocks. There's been a big rally in a number of WA names, but on a relative value basis, the Atlas and the Lithium Ionic didn't react, so much to the Pilbara Latin, and I think in Australia, Brazil is not so well known, even though Latin Resources is a Perth-based company. Chris Gale, is reasonably well known, but I think Pilbara is definitely raising the profile in the Aussie market, for that. And you mentioned AMG. That's interesting. There's so many, narratives within, lithium. AMG just, for all the talk about a North American, downstream supply chain, you actually have that developing in Europe. AMG just christened their hydroxide plant there. You have, Sabania, and Keliber, in Finland, and AMG invested in Savannah. I'm just weaving things. I totally forgot about the AMG being, in Brazil. Anthony, you're now in your office, and we got cut off when I was asking you that question before.
It sounded like you were trying to ask me a leading question, Howard. That's what it sounded like.
Darko, I think it was Darko, had talked about, intra-junior kind of mergers, like Galaxy, and Orocobre, and then, then Livent, now Rio. Where might we see that otherwise, across the lithium juniors?
I think you're hoping I talk about Sayona and Piedmont, Howard, but I will for your sake. That's probably the most obvious kind of merger consolidation that needs to happen. I think that it should have happened about a month or two ago when Sayona was trading at a 40% premium to Piedmont. I believe that the merger is more beneficial to Sayona because of the life of mine contract that Piedmont has across NAL. So I believe that that's one that definitely has to happen. But with Piedmont now probably trading at a 20% premium, I think it is on a market cap basis. They've been moving around a bit. There's just not that incentive for Piedmont to merge with Sayona. I think it should have happened the other way around when Sayona had that 30 to 40% premium. I think it starts to get tougher with some of the WA hard rock producers, given that MinRes has basically taken almost a blocking stake in probably 3 or 4 of them. That makes it a little bit harder. So there is some negotiation that has to happen if you do want to acquire any of those WA-based players. But I think they're probably still going to end up in some kind of consolidation play where there's almost a centralised processing hub within WA and they all kind of feed the rock into it rather than them being almost standalone projects. So in some ways, MinRes almost becomes almost like the OPEC of the hard rock game, for want of a better terminology, in that they can dictate which of those projects kind of come on stream when they need to and at what pace. So in the smaller end of town, I think MinRes holds a lot of cards in WA as well as Gina. Obviously, she's got the relationship with Chris, so there's a fair bit of, I guess, negotiating to occur there to determine how those cards play out. I think the Piedmont Sayona one is extremely obvious still, and then there's a whole bunch of other guys in Quebec that are there to probably get taken out at some point or another. I think Patriot is a very obvious takeover candidate at some point. I think it looks like a cracker of a project. Obviously, it's large. It's got good grade. The one issue is obviously the regulatory environment, which they'll tell you is not an issue. It's going to take a while for that project to get developed and go through that regulatory process. I still think that it's worth the effort. I think it can be as big as Pilbara at some point into the future. So I think it's worth investing the time to do so. But there's no rush, obviously, in the short term for someone to take that on, except if there's the belief that there's going to be a bidding war for that asset.
Okay, Anthony, your connection was not awesome there, but just to summarize, if any of you didn't hear that well, so you think Sayona Piedmont is an obvious merger candidate, but it kind of depends on the exchange ratio between the two parties.
100%.
And then in WA, you think Mineral Resources and Hancock, complicate things, but there should be a regional hub in WA for some of the assets, so that'll play out, in time. And then you said Patriot, you think is a good target as well in Quebec. Rodney and I have been having, I visited the Sayona site. If any of you haven't seen the site visit video, I would encourage you to look at that, because it really is going a long way, apart from Rio buying Arcadium, to showing that you can produce concentrate, in a consistent manner from that ore body. And obviously there's a freight differential disadvantage by selling it to China, but otherwise there's great rocks, in Quebec. But we talked to a lot of industry insiders and OEMs and the like, who have looked at a lot of the projects within Quebec, and one, a group that we spoke to in particular, highlighted actually Moblon, within Sayona as a stellar underappreciated asset, and also Winsome from a CapEx point of view and a fast and time to market point of view. So we love Ken Brinsden, and with the Patriot deposit is great. Q2 looks to be following in a similar path, but there is the timeline to production. Wabuchi is in construction, Galaxy is permitted, Moblon is at DFS, and Winsome has this, through the Renard, very innovative thing. And then you got to look at valuations of the companies as well. You're talking, Sayona Piedmont, you look at Winsome, Patriot, Q2 is climbed up to be higher than Winsome's valuation. So like you're in the where are we in the cycle, right? Like the Raiden Resources just raised $10 million, okay? And they have an over $100 million market. This is the Andover, maybe Redux. So the market very quickly, even though lithium prices haven't risen, this is not March 2020, right? Or even, September 2020, which was Battery Day. And, you had companies that couldn't raise any money with less than 10 million market caps. You still have availability of money, certainly for exploration and the like. So getting back to an earlier question I had, we had a false start in April. We thought there was going to be an uptick, and it turned out to be not a good time to be buying the equities. So is it going to be a fool's errand if we're like chasing things that have risen right now, so what's your gut, Anthony Darko, on the buy side here? Would you be accumulating shares, and what kind of, if you can name specific names, great, but if not, like just what's your favored geographies or types, brine versus hard rock versus DLE versus clay?
Look, probably I think we're at that point where if you've been in the space and you're out of it, that's all well and good, but the risk reward probably over the next 6-12 months is probably biased on the upside, simply because of fundamentals. Demand's still pretty good. I was in China in June, and those people are rocking, and the automakers like BYD, this is the time of year when they start to see increased sales. So there's a seasonality element in the fourth quarter that's driving demand, certainly EV sales, and I think that'll flow onto lithium. Look, I think when you look at the space, it depends on the metrics you use or whatever it is, but arguably these things are way off their highs. They, to me, look cheap simply because they're trading on high multiples. And you go to the producers first, because why take the risk on some junior company that's subject to development and all the other risks that are involved? And let's face it, at this market, a greenfields development will just not be financed today, I would think. If you're out there looking for $300-400 million to build a hard rock mine anywhere, you won't get the money, nor will you do it for a brine operation. So I think you just look at an Albemarle, that would be at serious leverage if commodity prices rise, whether that's brine or production or hard rock, it doesn't really matter. So Pilbara, Albemarle, you can argue Sigma looks pretty cheap at these levels. Having said that, none of them are generating any free cash flow as we stand, and the market likes free cash flow. So, it needs to transition to that before you start getting the big money coming in. So I think if you're a bit of an early player, I think it's time to start sort of adding a few names if you haven't already. Do you go whole hog and buy your ultimate position? Probably not, because I think what we've seen is the positive news is starting to flow through from an EV point of view. We're yet to really see information or follow through on inventories in that supply chain. We don't know what they are. There's a lot of debate what it could be, but what you want to see is that falling. The irony of all of this is, even in this pullback, I've yet to hear a company tell me that a off-taker has deferred a shipment. So even in all of this negativity, people are producing and selling their product, and the customers are taking their product, and I assume they're processing some of it, or some of it's going into inventory. So actually, maybe as Hayden said, when you look at test the market, maybe the real market is better than the indices that are, kind of suggesting it's pretty bad. Maybe it's a $50 difference or a $100 difference, but it's not what we think it is from a pricing dynamic that we see. So I think there's enough value in the big guys, in the mid caps. The question then is, what do you do with the development plays like, say, Patriot? It is a tier one asset, we all know that. We know what happens to tier one assets. Someone owns it or someone builds it. It may be Patriot, maybe someone else. I'm not sure who that will be. Obviously Winsome is a pretty good story. It looks cheap. People love Wildcat. We owned Wildcat in the past, but it's still got a couple of $100 million market cap, and yet to get a resource and all the rest of it doesn't mean it won't get bought out and everything. But why take that risk when you can buy something that's got heft and you can weigh your position accordingly by buying a producer, bigger scale, etc., etc. So I think I'm not negative on the space. So I think over the next 6 to 12 months, I think we're starting to see a few things improve. But to really go harder, you want to start to see that price signal move to the next level, and we're yet to really see that. So maybe this is the second false dawn that we've kind of experienced in the last 6 months, and maybe it's the third one that kind of moves us forward. But fundamentally, and getting back to just, I wanted to add, why Arcadium and not someone else. Just remember, Rio is buying a business, not an asset, right? Everything else is an asset. So if you look at, say, the geopolitics of it, the Chinese cannot buy anything in Canada and cannot buy anything in Australia. So who's going to buy those things? Limited pool. We talk about traders, we talk about Mitsubishi, Mitsui, and all the rest of it. Well, they're not operators, and they want the product, but they don't know how to run the business. And it's an asset, it's one mine. So what do you do with that in a volatile market? I think that what we're seeing is, what we'll see is what's happening in China. If you look at Ganfeng or any of the Chinese refiners, they're backward integrating. Right? They're backward integrating either with its lepidolite or they're buying some other mine somewhere else, like in Africa, and building a mine in Africa. The risk for a WA-based hard rock miner is they could be left swinging in the breeze when we see the next downturn, because who will they sell to and at what price? And you can see that actually with MinRes. Actually, MinRes, I think, their strategy was kind of, no, we don't want to do anything downstream. We don't want to be in China. We just want to sell high cost spodumene, basically. That's not a good business model, not sustainable over the long term. So, yeah, again, I think fundamentally, I think the sector's still good. I think you can tick the box that growth continues. My only big picture concern is that it's actually Europe and North America is actually spoiling the party. Europe, for obvious reasons, the economies are poor, so you have to say that rollout of the supply chain probably gets pushed out. And arguably the same thing happens in North America, simply because the EV uptake is much, much slower than people have anticipated. Now that might change going forward, but right now that's a concern. But again, I think it's probably the right time to start picking and pick the producers because they're pretty cheap.
Anthony, I'd like your opinion on that, but I'm going to add another question related to it. So the equity prices have moved in part because of M&A and in part because of the China stimulus. And we've all been waiting, the equities, and Pilbara's short interest has gone down, from 21 to 19%. So, but MinRes has been going up. Rodney always says, the equity market, someone always knows 6 months ahead of time, the equity, before the actual price moves, the equity markets are forward looking. So there's noise in the equities now. Are the equities reflecting higher lithium prices to come, and not just this move to 800, right? Are prices heading to 11, 12, 1500 from here in your judgment, or are the concerns about Europe and the United States being less good, going to put a bit of a cap on this? Oh, and can China lepidolite? We haven't even talked about China lepidolite and African supply. Can these things kind of come back on pretty quickly? To dampen any price rally.
Yeah, I continue to believe in $1,300 to $1,500 a ton long-term spodumene. I couldn't tell you if it's going to happen in the next 3 months or the next 3 years. I continue to believe that eventually we get there. I mean, I was probably the start of the optimistic that we might be able to get there by the end of this year. It doesn't
Anthony,
feel
your
like that's the
connection's
case
not
now.
so good. Sam and
it also feels like
Trent,
you
why
know,
don't you
you've got
chime in on that
Goulamina
question?
coming on stream, Kathleen Valley's coming on stream at the same time, Mount Holland's continuing to ramp. So there is a lot of spodumene in the market at the same time. So to sit here and say we're definitely going to get to $1,500 with all that supply coming on stream, it's a hard ask. The other thing I would say is, despite all the optimism within the equities and, you know, within, you know, China and the consumption story driven by the stimulus, the GFEX have actually gone backwards. So I look at this every day, and I think a week or two ago we were at 85,000 renminbi, and today we're at 74,000 renminbi, and those are futures looking indices, right? And so 3 months out, that's actually dropped by 10%. So to sit here and say, oh, we're definitely going to go to $1,200-$1,300 in the next 6 months, is probably a bold statement to make. But I agree with Darko that it feels like, you know, if we're not at the bottom, we're, you know, along the bottom, and whether it lasts 3 to 6 months, I think you can comfortably add, knowing if you've done the work with some of these companies with, you know, pricing in a spodumene price of $900 or $1,000 a ton, that hopefully we'll get there in the future, and you're not overpaying for something if you continue to believe, like we do, $1,300 to $1,500 a ton for spod. But do I think that the spodumene price is going to lead you there? Probably not. And that's probably the one thing that's really going to drive sentiment, is if you do see that spod price get above $1,000 a ton, then I'd suspect the equities run even higher than, you know, the look through of 1,300 or 1,500, because I think they'll overshoot to the upside again, because people think that we're on another sustained recovery beyond that.
Okay. Trent, I wanted to ask you, and also Sam, there are some stocks there that are like completely ignored, but they could easily double on very low volume. I think like Savannah was one, and some of these like totally forgotten, but like AMG just like showed up in there. One stock you cover, it's a client of ours, you know, full disclosure. By the way, I forgot to mention, you know, not investment advice. Do your own research for everything here. Benji will probably have to record something at the end of this just to put that at the front end, because I forgot about that. But something like a European Metals Holdings, you know, in Europe, or, you know, Sam, I guess Ioneer has moved a bit, but there was news, Rodney, you know, sent me that Appian looks to have won their lawsuit, you know, on a nickel deal, but we don't know if Sabine is going to have to pay a significant amount until kind of like, you know, next year. But you know, it looks like Ioneer is going to get permitted, and then Sabine is going to be on the hook for like 470 million or something like that. If they fall away, I'm wondering, you know, does Rio, you know, come into that? But these are names that, you know, not everybody, EMH, Ioneer, are not talked about nearly as much as some of these other names. And for those of you kind of watching this, you know, if your Wildcat, you know, moved an enormous amount, or you missed Q2, or some of these other names, like, look, what are stocks that haven't moved, right? That maybe you could look at, but obviously everything's speculative. But you know, what do you think? Are there any off the beaten track? I guess you guys are sell side analysts. You can't speak about things that you don't cover. But I guess Sam and Trent and Hayden, I'm not sure who's in your coverage universe. If you could talk about some, you know, some dark horse, you know, names that are less well talked about.
Do you want me to go?
Yep.
Or Trent?
Yeah,
Trent, do you want to go?
Nope. Why don't you Sam, Trent, and then Hayden?
Okay. All right. Yeah. Look, as you say, yeah, there's a few little names around there, and some. Yeah. Look, even over the last week, I mean, Atlantic Lithium, right? Both LSE listed and ASX listed. It's up 50%. You know, and I think that's a good example of a stock that's
they got a permit.
Large.
So
they got it. Yeah, they got a mine operating permit. But you know, that move of 50% over the past week was progressive every day. You know, it wasn't just a big move on the back of that. There's obviously a few things at play, and I think that's a good example of a stock that has largely done everything right as a, you know, junior project developer over the past 2 years, but they've done it against the backdrop of a lithium market dropping, you know, out of the floor. And you know, obviously, when sentiment turns, they're well placed to obviously benefit from that. But I think, you know, one of the other sort of left field things that I'd mention in terms of I guess perhaps some out of the box thinking on impacts of the Rio Arcadium deal is, one of the things that I found, up until very recently, I was based in Europe, is that getting the attention of the European equity investor on lithium was very, very difficult because it was an easy thing for many of the investors in that part of the world to ignore because there clearly weren't the large players or index relevance for lithium, but clearly with one of the largest players in the sector now having a significant exposure in the space, I think that that one of the upshots of that is potentially seeing broadly the knowledge base of the European investment community come up the curve with regards to lithium, and perhaps that may provide some opportunity for some of those European listed juniors who perhaps have struggled for a little bit of attention from domestic European investors, and now through necessity, they may actually get a little bit of attention where perhaps they didn't before. So while that's no specific names, perhaps that's a thematic that might play out in time.
It's very interesting. I appreciate that color. Rio is obviously a very well-known name, in Europe with their London listing or their dual listing. So what do you think, Trent? Are people going to just back up the truck now for European Metals Holdings?
I don't think so. I think like Darko said, the money starts at the lower risk ones and then it trickles down eventually to the very high risk ones. EMH is at the end of the very high risk ones, but it does obviously have a proper asset in a strategic part of the world. Obviously, Europe has been extremely disappointing with their integration, I guess, and raw material acquiring. So, and that's why EMH is so cheap, because this perception is it'll never get built because no one will ever want the product. But that'll probably change, and it can change reasonably quickly. So yep, that's definitely a laggard that has potentially a lot of upside, and I guess maybe that'll change around potentially M&A, because that one is a strategic asset that maybe someone, it's a strategic asset with a lot of lithium. It's high cost lithium, but it's in a region with that's not endowed at all. The other one, which is it's a bit different, but it's in Europe as well, as Talga. They've got the exploration ground for lithium in Sweden, so that's something to think about. And I still like Winsome.
I'm sorry, did you say Talga?
Talga. It's a graphite.
It's Talga, the one that SQM
that's right,
invested in that. Okay.
Yeah, so that's one off the radar as a lithium stock, and its graphite project is the main asset, but that's something to think about if you're looking for laggards that haven't moved at all on lithium. And then I still like Winsome. I mean, it has a run from its bottom, but like you pointed out, relative valuation to a lot of other spodumene projects that are advanced or on a shorter timetable, like Winsome could be. I think that still looks very good as well.
All right, great. Hayden?
Howard, just before Hayden does, it'd be remiss of me not to mention Pantera Minerals, if you wouldn't mind for 2 seconds. I should say I'm a director of this.
I was gonna get there, Tim.
I'll leave you with it then, Howard, and come back to you when you're ready.
Because I was going to circle back to David, and I want to talk about Lithium Argentina. We haven't talked about the way to play Argentina was Arcadium, so there aren't a lot of people saying, the future of brines look fantastic, but there aren't that many ways to play brines, right? But anyway, Hayden, any off the beaten path ideas, and then David, and because David also knows a bit of Standard Lithium, and then we could talk about Smackover and Pantera.
Yeah, sure. I think I'm a little bit in Darko's camp, to be honest. I think a lot of the West Australian exploration companies have gone back into sort of caretaker mode, really. Global Lithium, Delta's sort of reassessing what it's doing with its gold asset rather than aggressively drilling out on lithium. So you're seeing some of these smaller things just sort of pull right back from what they're actually doing. It's only really Wildcat in WA that's still having a crack and still advancing their asset. But as we discussed before, I mean, you're talking about the big stocks factoring in $1,000 or $1,200 or whatever it is in spot pricing. But for some of these smaller things that could have huge share price gains if prices went to $1,500, $1,600, $2,000 a ton on spodumene. for some of them, that's probably the price they need to sort of rethink the development potential of the projects. Then while we're waiting for that to possibly happen, you're going to get pretty significant returns in IGO and Pilbara and Liontown and these sorts of things. And Liontown probably the biggest leverage play to all of that, because if you can get a price recovery whilst they're in a ramp-up mode and, needing cash flow to develop the underground, to swing from open pit to underground, it could be a material shift for them. So, maybe not on the ultimate small cap end, but the left field one for me would be Liontown. If we're thinking prices are going to move higher and sentiment's going to move higher, that's the one that's going to be the key benefactor, because they're producing today, and for every dollar improvement you see in spodumene prices, they will start to benefit because they're putting, they've done 2 shipments already, and that'll start to accelerate.
It's a good point, Hayden. But whenever I think about that logic, my mind goes to kind of Piedmont and Sayona, right? Like, so if you believe prices are going to, tick up, and then you're looking at something that's in either company, it's about a 200 million market cap instead of like still $1 billion market cap. So that's, David, you cover Piedmont and also Lithium Americas. And Anthony, your connection is not awesome, Anthony. So forgive me on that. But David, let's talk about, I guess, Argentina, ways to play Argentina. Thoughts on Piedmont, and you cover the oil and gas companies. I think you had some view, like Exxon came into the smack over through this acquisition of like Galvanic, which was rumored to be like $100 million. We were hearing, that's maybe was undershooting, the number. There's a lot of secretive, and Standard Lithium stock has been soaring, as has Piedmont's, just in the past like short while. So with no news, Equinor kind of came in. So if you could talk about Argentina and then, Piedmont and I guess the smack over plays.
Yeah, sure. Obviously it's quite difficult to play Argentina. And then you have Lithium Argentina's, which it suggests its namesake that there's a presence there. I think the complication, right, is that, we like Lithium Argentina's as an inexpensive stock. Arcadium was obviously our top pick, so we're not going to mourn for our top idea going away. But I think it is quite challenging sometimes to replace like a second best. But look, like with Lithium Argentina's, it's a matter of like playing these cycles correctly. And if you think that there is going to be a price correction in the next 6-12 months, you already have Caucharí-Olaroz that's effectively at nameplate and getting the battery grade next year, right? So if they're going to have a large project development update, I believe, that's going to encompass things like Pastos Grande and Pozuelos with Ganfeng, by the end of this year. And I think it'll be an interesting, informative catalyst for investors, because I think that there's a very attractive financing option for them. Alternatively, at the same time, when you think about takeout candidates, Ganfeng's presence obviously complicates things for most buyers there, right? So I think I wouldn't necessarily view them as one where Rio would consolidate something like that longer term, but I think as a going concern, it's still quite interesting. And then you obviously have the event path, which no one really has edge on, but there is considerable upside in Lithium Americas, with the Thacker Pass project, targeted to have this committed financing from the Loans Program Office by the end of the year, which I know for most outside observers probably feels like there's contingency around the election, but I don't think that that's the case necessarily. I know that might sound silly, but this is. They're not a political organization. They've been in process for quite some time. And while obviously like a change in administration between Democrat versus Republican might change how the Loans Program Office targets projects going forward, it doesn't necessarily invalidate what's happening with Lithium America. So I think certainly an interesting one. And then, like outside of that, there isn't much to do on the brine side for certainly like, U.S. listed companies. And then, you have Piedmont, which, is up almost 100% in the last week or so. It seemed like it was going up 20% every day. I think that it's clearly a lot of short covering that's been going on. There also seem to be some cross-border, short covering because they're dual listed on the ASX as well. So I think you kind of saw some of the sentiment that was lifting Sayona and now Piedmont finds himself in the place where they're really, it seems like trying to take like a very long dated wait and see approach and find project partners around financing, because there's a number of opportunities out there, including Iliad and obviously Carolina and Tennessee, that I think are just getting pushed out further and further. And in the meantime, obviously, you can wait and see if the spodumene prices improve and those cash flows from Sayona finally start to look attractive here.
You don't cover Standard Lithium?
I don't.
No. Okay. My view of those is just like three names. I think Lithium Americas will get funded. I asked a couple of questions. There were some events here during Climate Week, and there was a senior GM representative, and then I spoke to another GM person, and they're very committed to that project, which is interesting.
It's a very important distinction, because the loans program office wants to align with companies that have sponsorship from large American OEMs. So the fact that, and I agree with you, that the financing will come and GM's seat at the table there is a huge differentiator.
Yes, but what's interesting, if you kind of just like look back and say Rio Tinto is paying $6.7 billion for 75,000 tons of existing low-cost production, and the price tag on Lithium Americas is $3 billion, to build 40,000 tons, right? You're an equity investor in there. GM is going to own like 30 to 40% of that company. And there's talk of price floors and the like in there, but this is like I don't know which one of you were saying or is Tim, a U.S. response to China. If you look at that, that's government motors, GM. And the Loan Programs Office, it's kind of like BYD or CATL, financing a lepidolite mine, right? Thacker Pass is better than a lepidolite mine, I think. Interesting. I'm wondering. I think Thacker Pass was in that first quartile in the Rio deck. I posted today, just like on the other, yeah, I think that deal goes through. But the question is, it's then in construction for 3 or 4 years. Are they going to be on time, on budget? Are they going to produce at cost? So just like as an equity investor in the Lassonde curve, perspective, that thing gets funded. But then what happens to the equity, after that? Like obviously it'll go up if lithium prices are going up. I think that is in construction. It'll be construction pictures for a while. And then Lithium Argentina, you're right, they can't really be bought by anyone other than the Chinese, I think. And then they have some debt, and it's not really clear what their revenues are, because just like with the production is there, but there's no visibility in the way that there is visibility in Arcadium or even some of the other names. But in the smack over, what do you think of? Because you do follow the oil companies. I think Tetra TTI is a name that's in that space. There is, and Exxon is making some big pronouncements about the space. I mean, a long-term threat to hard rock or the broader narrative. If E3 in Alberta. Or the Salton Sea or Arkansas, if they can figure this out and they don't need government money, they're big balance sheet, companies, what's happening there? Because there's been a lot of dynamism, or at least, Coke is there, Equinor is there, and Tim, you can plug, Pantera, is there with some acreage, not yet, drilled any holes, but just as an area, and a way to play it, right now Standard Lithium is really the only way to play that region, I think.
Yeah, I mean, you could get in it through Tetra, obviously, as well, but
right.
Obviously they have like an oil services overlay, so it's a much more complicated story. If you're just looking for lithium specifics. So yeah, I mean the standard and standard is going to be like a one project, one DLE solution type company, right? So it's no one's going to be investing in Occidental or Exxon for their exposure to lithium. I think it's more just what does that do, and I think people have brought this up with Rio as well. Is if you have this sort of conglomeration of large companies that are agnostic on lithium price and just care about project development, what does that do to the cost curve longer term? Which, in the case of Occidental and Exxon, both of whom are targeting, 100,000 ton type projects. Not to say that that's feasible, but and it's not to say that it's even material to them, even if they were to succeed. But they're going to be completely price agnostic there, right? So this is like a science experiment right now.
Okay. So there are a couple of other names that we haven't or thematics that I don't know if you guys cover it, but maybe you have an opinion. So like Lake Resources is an Argentine story and it's a DLE story. Any of you have any opinion on Lake or Galan, in Argentina? No one raising their hand.
Oh, look, I mean,
Howard, I think a point just to make on lithium brines in general is there's only sort of half a dozen big salars which have grade over like 400 parts per million. Yeah, and half of them are now going to Rio Tinto. Albemarle have one. SQM obviously have one. Lithium Argentinas have one. There's not many others outside of all of that. So when you look at that Rio Tinto cost curve, which they put out last week, you saw the brines are absolutely at that bottom edge of the cost curve. But it's only those half a dozen or so. Why DLE is needed? You heard Ernie talking about where Eramet's trying to get to. Now, obviously, what you put in a model and what you actually end up doing in actual real life can often be different. And normally, your costs don't go down, they go up when you do it in real life. But obviously, what the whole purpose of DLE is to equalize so that a mid-grade lithium salar can be at the lower end of the cost curve, which is Rincon was just shy of 400 parts per million. That was absolutely why we were focused on DLE for so long before it. And the smack over, so just going back to plugging Pantera, which I missed the opportunity on because it flew past. The smack over is 300 parts per million as well as an oilfield brine. And that's fairly unique in the oilfield brine. So all the others are 100 parts per million. That's what makes it key. So when you look at the brines in Argentina, outside of those big 600-700 parts per million salars, none of the others will work unless you go DLE because of that grade and cost, etc. of it. And I mean, all this lithium triangle stuff, geez, they're remote. Rincon was one of the less remote of the lot because we had a road which went past it and we had a power line which went past it and we had fresh water. Most of them don't have any of those things. And they're bloody difficult and very costly then to get the projects up. So ultimately, it always boils down to where you can get to on a cost curve. Grade is normally what too many people look at and make the determination of, but there's only one of a few very key variables, particularly when you're in that lithium triangle, where the infrastructure and the costs incurred of getting there are so huge, which is, again, why people then very quickly move to a West Australian hard rock, because on the principle, it can be done quicker, easier, and probably we have a better feel for what the costing might be. So long and rambling, I would certainly recommend people do have a good look at that Smackover region and Pantera in particular. Thanks, Howard. That's my plug done.
Okay. Appreciate that. In terms of threats, so those are potential threats if Exxon and others can kind of crack that code. But another threat is like, what happens if like AVZ and DRC get solved? Any of you guys have any views on Africa? There's also Caudal Minerals, I think is a name that's coming up. Like we got bit in the ass, I think, in the past year by a lot of stuff we didn't see. That was in Africa private or in China private controlled. So Yeah, like what's happening at Goulamina with Ganfeng, AVZ and Zijin. We're hearing rumors that it may already be in construction, but I have no idea. Zimbabwe with Bakita and the likes. If any of you, Darko, you guys, I don't know if you've been on any of these site visits or have insights from some other analysts, as any updated color on those things.
Yeah, if I can just add a few things. I haven't been to the African ones, but I've been to a lepidolite mine in June in China. But then I talked to various players who own the African assets as well. And Zijin, who I was in a meeting with Zijin, and they're talking about Monono, right? And we kind of keep on going, and they're talking about their project, and they've got 60% of it, and we're going to do 100,000 tons LCE. And I said, when did you get 60%? I said, no, it's not the AVZ Monono, it's the one next door. So they already got a project that no one knows about or talks about, and they're talking about 100,000 tons, let alone Monono, right? So a couple of points. One, lepidolite. So you visit, before I went, the perception was this is rubbish stuff. It's so marginal that no sooner will the price fall that they'll go out of business. So I visit a lepidolite mine operated by Zhongqing Special Material. So this is a company that used to be a clay mine, or still is, but they ended up getting into lithium. So you go and visit their mine, and it's no different to any mine you'd see anywhere in the world run by a Western mining company. Quality, different. It's done in a Chinese way, but different. But I'll just give you a spiel. So this is a fully integrated player, 30,000 tonne a year LCE, built the mine, processing facilities, and conversion facility, not at the same place, in a different location, for 600 million. The 3 million tonne a year lepidolite mine cost 70 million US. 3 million tonne, 70 million US. 1/3 to 1/4 or quarter of what you'd spend elsewhere around the world. And then you sort of ask questions, right? And you got to understand that obviously there's always things lost in translation, but you can kind of get the gist of it. So you ask them as you're going through, what's your cost structure and what do you do? So just to give you a rough feel for it, lepidolite mine, 0.5%. They produce a 2.8% concentrate. Deduct the discounts, etc., for the lithium contained, they might get $500, $450, $500 for the product. But then you go and work the cost structure, and they're doing it for $250. So they're making money. Now, this is a 3 million tonne a year operation, and they've already doubled the surface facilities for 6 million tonne a year. They've already constructed it. They're just waiting for the final permit. But what was a really interesting one is that everyone said it's low grade, and then you, as you would, right, you go and say, okay, this is your grade, this is your tons, and this is your recovery. You're producing more than what those numbers would suggest. And then you realize, there's a number, and 0.5 is the number. Above 0.5, you have to go through a longer, elongated permitting process. But if your grade is below 0.5, you don't have to go through that process. You just build the mine. So guess what? Every lepidolite mine is 0.5 or less. So I don't know whether it's 0.55 or 0.75, who knows? But if you just do the basic numbers, you figure it out. And then you go and visit their refinery. So this is a new entrant, hasn't been in the business before, builds a thing in 12 months, commissions it in 1 month to 2 months, and it's running. Look at the Australian refineries. Most of them are yet to achieve anything. Then you go and visit Sayona. Now, Sayona run an Africa, Zimbabwe mine. Same thing. You hear about, only 50% of the stuff is spodumene, which they can ship, and 50% is petalite, which they can't do anything with. They've got to leave it stockpiled in Zimbabwe. Then you go and visit their refinery, which they also built in 12 months and commissioned in 1 month. Then you say, oh, what's happening with the lepidolite? With the petalite. We're mixing that. We're actually processing it with our spodumene. No problem. So you think, well, okay, I didn't know that before. But the really interesting part about lepidolite is the refinery has to operate in a different way because of the lepidolite mineral. It acts physically, it's very different in a rotating kiln, which is what everyone uses. So what these guys have done is we can't use a rotating kiln, we've got to design something new. So what they did is they pretty much make cinder blocks, if you know what cinder blocks are. Slurry up the concentrate, form it into these funky looking cinder blocks on a pallet, and just push it through a static kiln, right, 200 meters long. And on the other end, it comes out, it's been transformed, they crush it and grind it, put it into the refinery. So they find ways to resolve these issues very quickly. And the level of innovation that they are undertaking is phenomenal. You know, you visit a refinery, there's a battery plant there on one side and a PCAM operation on the other. So the ecosystem, so what it means is their cost structure is materially lower than you find anywhere else. So then you go to Africa and Zijin, I'm trying to think what the name was, Sinamine, and I'm trying to think of the other one, it'll come to me, all have assets in Zimbabwe. And obviously Zijin has it in the DRC. And again, when you look at the capital that they spent, you know, they haven't spent $50 million. They spent $300 million on rebuilding the mine. And when you look at the facilities, they're no different to what you find somewhere in the West. So they're long-term assets. The only challenge most of them are facing is not the cost at the mine, it's the transportation cost from the mine to China. That's the real problem. And when I talked to Gan Feng at Goulamina, when the feasibility or PFS feasibility was done, you know, I think the transportation cost was $100. They're saying it's $200 to move from Mali to China. That is the problem. Same problem for the Zimbabwe mines, and they've got to figure out a way how to lower that cost over time, which means in a typical Chinese way, they're going to figure out some sort of common user / infrastructure, whatever they'll do, but they'll do it. I don't know what it will be to lower that cost to be much more competitive to China. So look, they're the X factors. I don't think they come out of the market as quickly as you would think. But having said that, most of them probably need about 85,000 renminbi per tonne to be viable over the long term. But I was positively surprised at just how dynamic and innovative they are.
All right, so Darko, you see some risk of supply from China as well as Africa, innovative. You know, the demand. We'll see what demand is. Who knows what the price is? I met with there was an analyst in New York, very smart. You know, I'd been on the short side, I'd been on the long side. You know, he was like, you know, lithium is not just going to be this, you know, it's not just going to like kind of tick up and then kind of level off at, you know, 1,100, 1,200. It's going to overshoot on the upside and the downside. So he sees 30, 40,000. You know, but maybe not until 2026, right? And as soon as he sees that, you know, then he'd buy kind of like Sigma and Pilbara, arguing as you guys have been arguing on being safe there. Do you agree with that? Because dynamic, you know, in the pricing, that we will have similar price volatility that we've had in the previous, you know, few years, or does Rio's entry into Arcadium, people are saying, you know, now it will reduce volatility in the market?
And guys, I actually have a hard stop, so I'm gonna need to leave.
Okay, I think we could wrap up on this. It's be almost 2 hours. Unless Rodney, you have any final question not addressed?
No, these are good. We've chatted about it. Maybe as a last wrap for everyone, I guess is well, actually we've discussed it in terms of when everyone thinks it's going to turn. But I think maybe just if people can identify something on the demand or the supply side, shock surprise. We're very bullish energy storage. I don't know if anyone else has got any other views on what might trigger a bit of a demand uptick.
And related to that, do you see lithium getting into this kind of 30,000 range sometime? 20, or you think it'll rise a little bit and then kind of flatten off? And if you think it gets to that spike, what time frame?
I'll go. I think it's just look. Really, it's just we've had a few people comment about the difficulty in picking timing, but really, I think it's just time for us to go for demand to keep growing, to overtake the supply reaction that we've seen over the past couple of years, and eventually get to a point where, as we've seen in a number of other commodities where China's a dominant player, is once the traders and the buyers for the end users or the converters indeed begin to believe that the price is going to go up, then it all becomes a bit of a self-fulfilling prophecy. Right, as soon as they believe that the price is going to go up, then you start to see restocking aggressively, and it sort of it starts to snowball. So I think that really it's just time, working through the current oversupply that we're seeing, demand overtaking supply again, supply then struggling to I guess re-accelerate, and consumers getting concerned about getting the availability of product. And suddenly panicking, and that's when you see prices start to squeeze.
My demand shock, maybe I misunderstand it, is the fully autonomous cars. So I know the Tesla Day on Friday sort of disappointed some people, but my experience of the Waymo experience in LA and San Fran is unbelievable, and I think that's the next wave of consumer demand. When you get a fully autonomous EV, that kicks off the next wave of demand. And I don't really understand enough of what Tesla's saying about their Model Y fully autonomous next year, if it is or not, but I think that could be a huge pickup in EV sales. And then every automaker is going to have to follow that Tesla lead. If they do start selling them into new markets or new adoption, then you get another second big wave of EV sales.
Trent, do you see Tesla as ahead of the Chinese on autonomy?
I only know what I read, and I don't know. I don't know. I mean, they obviously definitely are ahead of the Chinese in USA, because the Chinese have no hope of fully autonomous EVs in the USA. So I'm not sure it necessarily matters who's ahead. I think they're going to be two separate markets. You need an industry leader and someone who the regulators will allow in each market. So I don't think it necessarily matters. As long as there is a fully autonomous EV operating in the biggest markets in the world, I think there's going to be big pickups in sales in those markets. Because it's a completely new offering. The problem in the US, I think, is the EV offering is not what the consumer wants, or hasn't been. It's been reasonably niche, except for the bigger, more recent bigger SUV EVs. But autonomous self-driving vehicles, it's a complete game changer of what a car is.
I would add to Trent's point.
Okay, and David.
I was going to say, I would add to Trent's point. I would say the one thing outside of price that consumers want that aren't necessarily available in EVs in the West at the moment is range for one, power, and safety. And I think that those three issues are going to get solved with solid state. Now, I'm not saying solid state is going to come in the next 6 months, but I would say when we see that switch to solid state, which hopefully is coming in 2027, which is around the time that most people are kind of promising it, that's when we could see some of those issues be resolved and hopefully see a more material uptake in EVs in the Western world. Now, MG has a vehicle that I think is slated to come out in Q2 of 2025. I think it's the Cyber GT. That's promising a solid state battery, and that's kind of 2 years before they were initially expecting it. So maybe that could be one of those things that starts to, I guess, get the ball rolling on the solid state battery, because that's something that I'm looking at being, twice the lithium content of a normal EV vehicle, twice the energy density of a normal EV vehicle. I'm hearing range of 1,000 kilometers plus, and the safety is chalk and cheese versus a liquid electrolyte. So the solid state battery is something that I'm looking forward to as being a potential game changer, but I don't think it's something that's going to be material in 2025. I think it's more of a late 2026, 2027 type of story.
It's still a lot sooner than most people are thinking for solid state. So appreciate your flagging that, because we're not hearing so much talk about solid state as we were a few years ago.
If I could just add just my learnings from visiting China and why they're probably why their penetration rates are accelerating is, I think in the West we spend so much time on the technical details of the vehicle rather than the whole system of having an EV and what do you do with it. So, for example, where do you take it for a service? What's the car worth when the battery dies? What do you do when the battery dies? Can you replace it? Who's going to do it for you? Who's going to deal with all the recycling material that needs to be recycled, whether it's production waste as you're growing the production chain or the end-of-life battery, repurposing the battery? What's the cost of insurance, i.e., surprisingly, you would think simply that an EV would cost less to insure, but no, in fact, it's more because people are concerned about the safety factors and all of those variables. So, whilst we focus on range, you've got to have all the other bits attached to it. So, you've got to develop that whole vehicle kind of ecosystem, not just having a vehicle and you think, well, okay, now I've got it, so what? Where do I go? And I think the Chinese are way ahead of that. And I think we're still kind of figuring out whether we want an EV and what sort of EV. And probably arguably they're still too expensive relative to standard vehicles. Whereas in China, if you listen to BYD, and they're the biggest EV manufacturer, their whole strategy is to mass produce. So it's basically like the Model T or whatever it is in the early days of the Ford Motor Company, mass production, lower the cost of purchase, and that gets you into market and gets you moving. I think that's kind of what they're doing, and they're far more advanced than obviously the other regions of the world.
Howard, I think just on the supply-demand piece and pricing, following from what Darko said there, China has a stranglehold in this industry that and has had for a long time, and because of that, they're able to effectively price lithium. So I've got no idea what the price is going to be doing from here because it's control. It's an opaque market which we don't properly understand. We don't understand all of the supply chains or all the amounts of stock is or aren't or any of that sort of stuff. I do think though that this short-termism, which I think they're guilty of at this absolute moment, is that they, by keeping prices low, and China can keep them low for as long as they want, by keeping them low, it stops anyone in the West from progressing projects, be they exploration, development, or even early builds. And that is going to lead to, the longer we have low prices, the higher the price will go when the pressure valve is released. Yeah. So I don't know when that will be, but say every passing day, I think leads to a bigger bounce when it does happen, whatever that might look like.
Okay, Hayden, final thought.
Yeah, it's along similar lines. I think the longer we're sitting at these prices, the more damage gets done to balance sheets, and we sort of talked about why Arcadium accepted Rio's offer with glee so quickly, because I think they could see internally in certain pricing scenarios, because they pointed to consensus a lot in their forecasting. But if you're running $10,000 a tonne for a period of time, then it all got pretty tight pretty quickly. So I just think that the impact on them, Albemarle's in a similar boat. If we see these prices here for a long time, they're heavily committed on capital on a few projects, that their capacity to do anything in terms of organic expansions becomes quite limited. Pilbara is a great example. They're $1.6 billion in cash at the end of June. If you keep the spot price where it is, they'll be down to about $300 million by the time they're done with P1000. So talk of P2000 and all this other stuff is pointless, right? It won't be happening unless prices are materially higher than where they are today. So we're that deep into the cost curve that even the incumbent players with what look like really attractive organic growth projects won't physically and financially be in a position to do anything. So I think the demand story is still quite stable. I mean, EV demand seems to be running at around 20% per annum. It's not as aggressive as it was, but it's still growing at a pretty decent rate. And ESS is probably the real kicker. And then if we're still sitting here at these prices by Christmas and beyond, then the capacity of the industry to respond and fill that supply gap as it emerges will just be non-existent, and we'll have another pricing scenario that pushes things well above the top end of the cost curve again. To what level is the guesstimate, but certainly that's the way I think it will head, probably in late 25 into 26.
Okay, great. Hayden, thank you. I'll make a concluding thought. Someone last year, I was at a one-to-one conference in New York. An Aussie made a funny joke to me. He said, the only thing that you get when you try to pick bottoms is smelly fingers. So, we thought we might have picked the bottom in April, and we were wrong. And now it feels good, better bid. We've had some M&A, but last year we had M&A, and commodity equities follow commodity prices. So are the equities reflecting the fact that prices are going to rise? Maybe. We need to see some follow through on these rising prices. And there's still a lot of uncertainty. The U.S. election is a big uncertainty. Even though Trump is very, chummy with Elon Musk, there's a lot of resistance on the Republican side to the EV subsidy, the $7,500. So let's see what happens. Cautiously optimistic, but margin of safety. I mean, Rodney has made the point. Even like what is an equity pricing in terms of a price? And Arcadium was clearly pricing in far below anything that's sustainable. Is that true in an equity that you're looking at, right? Is that true in Liontown? Is that true in Patriot? Is that true, in Winsome, or other companies? So relative value matters. Obviously, if lithium prices start rising again, all boats will be lifted. But, beyond that, it sounds like you guys are. I invested more in Arcadium because it's a producer trading at a crazy low valuation. And if you see a double in a producer, you need 3 to 5 times upside if you're going to go on a higher, risk spectrum, end of the risk spectrum. But, those who invested in Raiden or Q2 or others, there's speculation there. So there's opportunities for all types of risk appetite in lithium, as has always been the case over the course of the last 15 years that I've been watching it. So thank you very much, all of you, for joining our first ever Lithium live stream. This has been recorded, so we will publish it for all of you who haven't seen it live. Thanks, Darko. Thanks, Trent, Hayden, Anthony, Tim, and Sam, and Ernie and David, who have already left. Take care, guys.
See you soon, us all.